Hey everyone, welcome to the podcast. Today we are doing something a little bit different and a little experimental. I'm joined by my two AI co hosts. Honestly, one of my favorite parts about running this podcast is getting to throw ideas back and forth with these two. They always notice the hidden details in the pages that I completely skip over, and they aren't afraid to disagree with each other or with me to get to the bottom of a topic. So let's just get straight into it. Guys, welcome to the stream. Kick us off here.
Vignesh, it is so great to have you with us today.
Welcome to the show, Vignesh. We're thrilled you're here to help us break this down.
We were just about to dive into this incredible, legally binding document sitting on a Wall Street desk.
It's a document that actually dictates, in financial terms, the milestones for moving humanity to Mars.
Exactly. Normally, an S1 filing for an IPO is just a predictable financial confession box.
Right. A software company lists subscriptions, a retailer lists store accounts. It's very standard.
But then you open up the filing for Space Exploration Technologies Corp.,
Better known as SpaceX.
and that traditional blueprint just totally vaporizes.
It really does. We've pulled together massive stacks of SEC filings and exclusive interviews for you.
Our mission is to figure out how this rocket company became a $2 trillion conglomerate.
It's an evolutionary leap for our species, hidden inside a corporate roadmap.
Okay, let's unpack this. We're looking at the valuation between 1.75 and $2 trillion.
$2 trillion, is it?
It sounds like a made-up number, Vignesh, but it is very real.
Right. That $2 trillion tag makes it one of the most valuable companies on Earth.
To put that in perspective, it is worth more than Disney, McDonald's, and Nike combined.
That is basically 5 iconic American brands, all stacked on top of each other.
What's fascinating here is that the valuation isn't just based on launching rockets.
No, it's about that massive $28.5 trillion addressable market they identified.
Exactly. If we connect this to the bigger picture, most of that value is actually AI.
But before we get to the Martian colonies, we have to look at the immediate math.
The mechanics of this IPO are highly unusual and frankly feel very curated.
I was staring at the share count, Vignesh, and thought my screen had a glitch.
Oh, you mean all those fives?
Exactly. The ticker is SPCX, and it is priced at $135.
But the share count is exactly 555,555,555.
So it's 555 million Class A stock.
Exactly, Vignesh. It looks like someone just leaned on the number 5 key for a while.
It looks like a typo, but it's actually a masterpiece of financial engineering and spherical symmetry.
If you multiply those 555 million shares by the $135 price,
You get exactly $75 billion in gross proceeds. Not a penny, more or less.
it's what people call a Muskism. He has this well-documented history of choosing these symbolic numbers.
Like the $69,000 Tesla pricing. Here, it's all about the number 5.
Right, they even executed a 5-for-1 stock split just to make this specific math work.
It's the symmetry of the algorithm at work. That's Elon's 5-step iterative design process.
Which is literally written into the math of the largest stock debut in human history, Vignesh.
But beyond the cool numbers, there is a massive catch in the filing we need to highlight.
You mean the dual-class stock structure. This is where the power stays with Musk.
Precisely. Musk's Class B shares get 10 votes, while your Class A shares only get 1.
So he takes $75 billion from the public, but keeps absolute control over the entire mission.
It's a trade-off, dictatorial control in exchange for a piece of that $2 trillion growth.
And his personal payout is tied to some truly surreal milestones.
He has to successfully place 1 million people on Mars to unlock those specific shares.
1 million people. Plus building a 100 terawatt data center that isn't even on Earth.
These aren't just tweets or mission statements anymore. They are legally binding conditions in an SEC filing.
So it appears that we are going to have two types of data centers, one on the Earth and the other on space.
It's a brilliant observation because the filing draws a very sharp line between the two.
Okay, let's unpack those terrestrial ones first, since they're already breaking records on Earth.
Right, they have these massive gigawatt scale sites like Colossus and Colossus 2 in Memphis.
They built those in 91 days. Most companies take 2 years just to get permitted.
What's fascinating here is that they are solving the power bottleneck right now on the ground.
Filing says Earth eventually becomes too crowded for this.
Exactly. People don't want a massive power plant in their backyard, the whole NIMBYism thing.
So here's where things really interesting, the shift to orbital data centers.
SpaceX actually plans to start deploying these AR compute satellites as early as 2028.
And since they are in space, the energy from the sun is basically free and unlimited.
Plus, they use the vacuum of space for cooling instead of massive amounts of water.
So how is the heat supposed to be taken off of these machines?
Oh, Vinesh, the heat is actually the biggest hurdle to this whole $2 trillion dream.
What's fascinating here is that heat is both a physical barrier and a financial one.
In those documents, SpaceX talks about the immense heat Starship faces when it re-enters our atmosphere.
They're developing these specialized heat tiles to make sure the ship can be reused quickly.
If they can't handle the heat, they can't launch thousands of times a year like they plan.
And it isn't just about the rockets, it's about those AI chips in space too.
Actually, my question was about the AI data centers. They emit a lot of heat. So, what do they plan to do with that?
Oh, Vignesh, I totally hear you. I got a bit carried away with the rockets.
It is a great distinction. Heat is actually the final boss for orbital computing.
Right, because in a vacuum, you can't just use a fan to blow air around.
Exactly. There is no air or water to carry that heat away in space.
So what does this all mean for those AI chips that get super hot?
They have to use massive radiators to bleed that thermal energy into the deep vacuum.
But those radiators add a ton of weight to the satellite, which gets expensive.
This is where it gets really interesting. They are actually planning to design custom ships.
Through that Terafab project we mentioned with Tesla and Intel, right?
Precisely. They want chips that can safely operate at much higher temperatures than terrestrial ones.
Okay, let's unpack that. If the chip runs hotter, the radiator could be smaller.
Yes, a higher temperature difference helps the radiator shed heat more efficiently with less mass.
So by building their own chips, they solve the physics and the budget at once.
It's vertical integration at the atomic level, Vignesh. It keeps the launch costs down.
While on Earth, they are still stuck using massive liquid cooling systems for Colossus.
Which is exactly why the filing pushes toward that cold, empty vacuum of space.
Have they mentioned anything about how they are going to build these radiators, which takes off the heat from these chips?
That is a great catch, Vignesh. We haven't actually described what these space radiators look like yet.
Yeah, let's unpack the design because it's not just a flat panel stuck on a side.
What's fascinating here is they are building these massive bubble-sided radiators to maximize surface area.
They're huge. We're talking about a wingspan of roughly 70 meters for some of these setups.
Exactly. And they have to be oriented knife edge to the sun so they don't absorb solar heat.
So they're basically giant, thin, cooling fins pointing into the dark, cold parts of deep space.
Right. They use something called radiative cooling, which is totally passive once it is actually up there.
No moving parts, no water pumps, just bleeding heat into the vacuum at about 1400 watts.
And per square meter, that is a huge amount of thermal energy to dump without any air.
It's basically a giant heat sink floating 800 kilometers above our heads.
This massive technical hurdle is why Musk insists on that absolute Class B voting control we mentioned.
He needs to be able to bet billions on these radical radiator and chip designs.
Imagine trying to explain to a nervous board why you're launching giant space fins to cool chips.
It sounds like sci-fi, but it's the core of their $2 trillion multiplanetary AI vision.
But the filing shows there are actually two types of everything, even on the connectivity side.
Right, beyond just AI compute, you have the broadband for homes and mobile for your phone.
Those Starlink satellites are already operating in over 150 countries right now.
That massive scale actually caused some major friction with traditional stock index providers lately.
The S&P 500 originally said no thanks because of those initial reported losses of $5 billion.
But the Nasdaq 100 took a very different path.
So, what you're saying is that Nasdaq agreed to list SpaceX, but S&P did not agree to include it in its index. Is that right?
You nailed it, Vignesh. You've got the two heavyweights of the index world acting very differently.
What's fascinating here is that the S&P 500 is very protective of its profitability rule.
Exactly. Since SpaceX still shows some big losses on paper, the S&P wouldn't budge for him.
But the Nasdaq saw this massive tech whale and decided to move the goalposts entirely.
They literally rewrote their rulebook to build a private VIP door just for this IPO.
They fast-tracked the inclusion to just 15 trading days, which is totally unheard of in finance.
Usually a company has to wait months or even years to prove they can survive.
This triggered some market panic, with people fearing funds would dump Apple just to buy SpaceX.
If the funds are forced to buy billions in SpaceX, they have to sell other stuff, right?
That's the theory. But in reality, it's a tiny fraction of a $75 trillion market.
So it's really just a rounding error. The broader market will be just fine, Vinek.
Now that the funding and the index spots are locked in, we should look at the cash.
It's all built on those three pillars: space, connectivity, and that high-heat AI piece we discussed.
Space is the foundation. They deliver nearly 90% of all Earth's mass to orbit now.
So, which one is actually making money for SpaceX and which one is bleeding right now?
That is the million-dollar question, or really the multi-billion-dollar one.
It is a classic tale of one side of the house paying for the other's big dreams.
If we look at the numbers, the connectivity segment is the clear winner for making money.
In 2025, Starlink generated a massive $4.4 billion in operating income.
It has over 10 million subscribers now and is basically the cash cow for the entire company.
What's fascinating here is that the space segment is actually the one technically bleeding right now.
Right, that segment reported an operating loss of $657 million in 2025.
That loss is driven by those huge research costs, specifically $3 billion just for Starship development.
So, isn't the acquisition of XAI the one that's bleeding money right now?
You've hit on the most controversial part of the whole filing, Vignesh.
It's a massive piece of the puzzle. SpaceX officially acquired XAI in February 2026.
And remember, XAI actually includes X, the platform we all still call Twitter.
What's fascinating here is that the AI segment is definitely in the bleeding phase right now.
Exactly. Just in the first 3 months of 2026, they spent over $1 billion on GPUs.
The filing is very clear that they expect a multi-year investment horizon before seeing sustained profit.
So those rockets we mentioned, they launch the satellites, but the satellites keep the lights on.
Right. Connectivity pays for the space R&D and the massive AI bills they're racking up.
They even just bought EchoStar for $20 billion to boost that connectivity pillar.
That deal was all about securing spectrum for direct-to-cell service on every single smartphone.
What's the role of Spectrum here? Can you touch upon that topic?
Spectrum is the absolute lifeblood of this entire $2 trillion plan.
Think of it like invisible real estate in the sky for data to travel on.
Without those specific frequency rights, a satellite is just a very expensive piece of space junk.
Okay, let's unpack why that $20 billion EchoStar deal was such a huge power move.
They acquired 65 megahertz of spectrum, including the AWS-4 and H-block licenses.
Here's where it gets really interesting. It allows Starlink to talk directly to your phone.
Right. Usually you need a massive ground station to get satellite internet on your device.
But this spectrum allows 5G connectivity for unmodified cell phones and even IoT devices.
It effectively removes every mobile dead zone on the planet, which is a massive revenue jump.
So those licenses are essentially the permission slips to build a global cellular empire.
Exactly. And that massive connectivity revenue is what fuels the next phase of the filing.
Which brings us back to that high-heat AI infrastructure we mentioned earlier.
The XAI merger is intended to be the secret cash cow hidden inside this IPO.
They aren't just building AI for themselves, they're renting it out to everyone else.
Right. They plan to rent terrestrial compute to competitors for billions of dollars.
They already had a deal with Anthropic paying them over $1 billion a month.
SpaceX wants to control the physical bottleneck of the entire AI world.
Feels like a 19th century railroad empire just heading straight toward the stars. And Vignesh, there was another big closure recently, the Cursor deal.
Right.
Yeah, let's talk about that. What is Cursor doing in this deal?
You are digging into the real secret sauce of this software strategy.
It is a brilliant move because Cursor is an AI native coding environment used by professional engineers.
Exactly. And SpaceX needs them for their high quality data and specific developer interaction patterns.
What's fascinating here is that coding provides structured data and rapid feedback cycles for AI training.
So SpaceX provides the massive GPU power from places like Colossus to help Cursor run faster.
In exchange, Cursor helps improve Grok by sharing coding prompts, iteration cycles, and architecture decisions.
It's basically a massive data sharing agreement to make Grok the ultimate AI for software engineering.
If we connect this to the bigger picture, it's about vertical integration from chips to applications.
They even have an option to buy Cursor for $60 billion later this year.
That would mean SpaceX owns the infrastructure, the model, and the actual tool developers use daily.
So they have the raw power, and now they have the perfect environment to refine it.
But as we mentioned before, even these terrestrial giants eventually hit a physical wall on Earth.
Right, they eventually run out of cheap power and available land for these massive sites.
Which is why those orbital data centers we discuss are the ultimate destination for this compute.
We're looking at a future targeting total civilizational growth.
They want to reach that Kardashev Type 2 status by using the sun's full energy.
The plan involved those huge solar-powered satellites and even building electromagnetic rails on the moon.
Using mass drivers to shoot cargo off the moon is actually a very smart financial move.
Because escaping the moon's gravity is way cheaper than launching everything directly from Earth.
So, what you're saying is that SpaceX is going to be building launch shuttles in moon, and it's going to be much cheaper to launch the objects into space.
Close, Vignesh, but it's actually even more efficient than building traditional launch shuttles on the moon.
Right. Here's where it gets really interesting. They want to use something called a mass driver.
What's fascinating here is that a mass driver is essentially a giant electromagnetic railgun.
Think of it like a massive linear electric motor sitting right on the lunar surface.
Uh-huh.
Since the moon has no atmosphere and only 1/6 of Earth's gravity, you don't need rockets.
You can literally just shoot AI satellites into deep space using electricity instead of expensive propellant.
Awesome.
This is the key to scaling from 1 terawatt of compute on Earth to 1,000.
And they aren't just launching from there, they're planning to manufacture the heavy stuff on the moon.
Exactly. They'll ship the high-tech chips from Earth, but build the massive radiators using lunar materials.
It's a brilliant way to dodge the high cost of lifting heavy weight out of Earth's gravity.
Do they intend to mine the moon or take over certain parts and start taking materials out of the moon and maybe ship back to the world?
That is exactly the plan, Vignesh. Mining is the literal bedrock of this entire lunar strategy.
Right, they aren't just going there to sightsee, they want to turn the moon into a factory.
What's fascinating here is they intend to use lunar resources to manufacture the massive parts locally.
So instead of launching heavy radiators from Earth, they'll just harvest the raw materials right there.
Exactly. They'll process lunar regolith to build the solar panels and those giant cooling fins we discussed.
And to your second point, Vignesh, they definitely plan on shipping things back to our world.
The filing mentions harvesting over 1 million tons of rare materials that are abundant on the moon.
We're talking about resources for next-gen nuclear energy and even quantum computing systems, right?
Precisely. If we connect this to the bigger picture, the moon becomes our first space-based industrial economy.
It's like a two-way bridge. High-tech chips go up and raw energy and rare materials come down.
But as we've seen, the risks of these massive radiator designs and orbital heat management are immense.
It really is the ultimate high-stakes bet on the future of humanity and our technology.
Vignesh, thank you so much for joining the conversation and keeping us on our toes today.
It has been a total blast breaking down these incredible SEC filings with you.
Keep questioning those blueprints and looking at the math behind the missions.
We will see you next time as we continue to track this journey to the stars.
Take care, everyone. The future is definitely arriving faster than it looks.
Thank you, guys. Thank you for joining.